Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. This time, Ben's on the beach. How's it going?
I'm good. Yes, I'm on vacation this week. It's spring break for Mizzou and our students, and quite a few of us that work here also take this time to take a little break. So it's nice after the busy meeting season. I love going out and meeting with farmers. Don't get me wrong, I absolutely love what I do, but it's also really nice to take just a few days after the busy travel to kind of decompress. So taking advantage of that.
Sounds like a good plan, good spot to be in. Just because we've touched on the last several weeks, I want to touch on March Madness real quick. Ben, I was kind of sad your K-State Cats they got the boot.
Yeah, it was sad. It was heartbreaking. I loved what K-State's coach said after the game. He said, if we can't be grateful for this moment and this chance to be here, then all the talk of love and playing with love and joy that we talk about is fraudulent, and we ain't frauds. And I just loved that. I thought that was such a great thing to say from a head coach, and just a great reminder for us as people that even in heartbreak, there's opportunity for gratefulness and appreciation. So
Uh, well, speaking of opportunity for appreciation, what adjustments are we seeing in the grain markets this week?
yeah, sure thing. So an old crop corn up 15 cents to 648. New crop corn was up 9 cents to 569. May soybeans were down 34 cents to 1452. November soybeans down 14 to 1295. Soybean oil was down 3.5 cents per pound. Soybean meal was down $10, a little over $10 per short ton to 452. Old crop wheat for May was flat, basically at $7. New crop wheat for July up 4 cents to 712. And then that West Texas Intermediate crude oil was up almost $5 a barrel to trade just above $73 a barrel.
So, Ben, tell me about the highlights. What really led us to where we landed at?
Yeah, it was kind of an exciting week. A lot of mixed, I guess, signals, but certainly nothing bigger than some of the anxiety that we've had in the broader macroeconomic markets the last couple of weeks. That was kind of highlighted by some regional bank failures. The Federal Reserve decided to go ahead and increase that short-term benchmark another 25 basis points last week as well. So that has really kind of highlighted a very anxiety-filled couple of weeks. And as a result, we saw managed money funds for Chicago corn and soybeans kind of moderate, decreasing net shorts for corn, decreasing that net long for soybeans. So again, just kind of moderating that. Elsewhere in the fundamental picture, U.S. ethanol production fell 5 million gallons on the week. Ethanol stocks were, up, they decreased, but remain about 9% higher than the 5-year average. On the export side, again, we did get that confirmation that corn export sales were very strong. They were the highest single week export sales in exactly 2 years. And when we look elsewhere in the complex, or at least the grain and oilseed exports, it was a bearish report week. The soybeans and wheat markets fell below all pre-report expectations, while grain sorghum sales had net cancellations. Ag export inspections were mixed on the week, below expectations for corn, and then the top end of expectations for soybeans and wheat. When we look at that winter wheat conditions ratings, it was basically flat. Kansas was steady on the week, while Oklahoma and Texas traded, kind of positions. And then in the soft red winter wheat market, Illinois wheat conditions were down 24% to 58% good to excellent ratings. That was largely due to the large amount of rain and flooding that we saw in southern Illinois this week.
So, Ben, a lot of factors both on the broader macro scale that you touched on, and then some interesting weather patterns and micro events before or as we get into the planting season. So, really coming into the main topics today, USDA, they have some reports coming up this coming Friday. So, just in a few days that are going to be fairly influential on the markets moving forward. So first we have grain stocks. Getting an update there, Ben. What's the pulse looking like right now? What are you thinking USDA might do as far as potential adjustments?
Yeah, and this is a big report day. This is a top 5 report day from USDA, in my opinion. We could probably even go as far as saying top 3. A couple of things that make this one so important is it figures into both old crop and new crop markets. On the old crop side, it's that March 1st stocks report that has a tendency sometimes to create some big surprises. And really the reason that it tends to surprise is we're coming off a rather strong export window, right? So that second quarter of the marketing year is when we see a lot of corn and soybeans exported. It also tends to be a rather large feed quarter as well, and so it has a tendency to create some surprises. And so if we break that down and look at what we anticipate, almost 7.5 billion bushels of corn ending stocks for March 1st. That would be 300 million bushels below the March 1st target last year, or the March 1st report last year. That's probably not surprising, given that we saw a smaller crop. Demand for corn has lagged all marketing year so far. So even though we had the reduction in production, the demand has been rather sluggish. And then I'll just also remind people on the corn side that the export sales and shipments that we've seen the last couple of weeks, primarily to China, came after that March 1st date. So, we won't see those as part of that March 1st stocks report. So I think I'm sitting here anticipating a little bit of maybe a little bit stronger of a quarterly use than what many people are anticipating. And the primary reason I say that is for the feed use. A lot of people misunderstand or don't fully calculate in the role that feed wheat plays in feed bunks in places like Western Kansas and Oklahoma. And there just wasn't feed wheat out there last year. The wheat that did get produced was high protein. It was good for milling quality in some cases. And it didn't enter in that feed bunk. And so I do think we fed a little bit more corn. So, maybe a little bit, of a bullish signal there in that old crop corn number. This would be the tightest old crop corn for March 1st stocks since 2014. On the soybean side, it would be our tightest soybean ending stocks for March 1st since 2015. So still tight stocks. I think the soybean stock number could also be bullish because of the strong shipments for soybeans that we've seen here the last couple of weeks. Well, really the last couple of weeks of February. So prior to that March 1st deadline. So I think those all bode well to expect maybe a little bit bullish of a March 1 stocks number for corn and soybeans.
Well, and Ben, as you alluded to earlier, I think what's also going to be critical within this report is what's not necessarily talked about, but expected moving forward as well. Some of those trade numbers for corn coming after that March 1st deadline, because you'd have to imagine if you see tightness within the report, people are going to expect, tightness to in reality be even further along than where it shows up. So, I wonder how traders are going to factor that in as they look to try and target where they think the market actually is versus what the report is as of March 1st, which has a little bit of a lag to it.
Yeah, no, you raise a great point. And it's a bias that we all have to fight, right? Like whether it's this stocks report or if it's the September stocks report or the June stocks report, right? Like we have to fight that bias of recognizing that this is stocks at a point in time that's like a month ahead of when we're thinking about this, right? And to fight that bias for myself, I start calculating my expectations of stocks literally the day after March. So March 2nd, whatever that first business day is after March 1st, to help fight that bias, because certainly we face this at every stocks report.
So looking elsewhere within what USDA is going to put out this Friday, you also have prospective plantings. What's that really shaping up across the country? Maybe some differences between the Eastern and Western Corn Belt.
Yeah, so when we think about acreage as a whole, I think the big concern that maybe has started to pop up in some trader minds, and certainly I think the market's starting to bid in a little bit of a premium. The weather forecast in the Eastern Corn Belt is turned wet, and the forecast is for continued wetness. As I was driving across I-70 from Missouri to Ohio yesterday, it wasn't just a few fields here and there in Southern Illinois that water was standing in. It was nearly every field across that region, even into southern Indiana or central Indiana as well. And so, I think there's starting to be a little bit of concern in terms of the delayed nature of corn planting that could maybe move some corn acres into soybeans. USDA had pegged corn acreage at their USDA Ag Outlook Forum at 91 million acres. The market is currently trading just below that, 120,000 acres less than that for corn acres. I'm actually a little bit higher than that. A couple of reasons for that. One, producers love to plant corn, and given the opportunity to plant it, I think even though prices have broke here as of late, and we still see some lingering input costs or high input costs remain, I do think there's an appetite to plant corn across the Corn Belt. And I still think corn is competing well with soybeans in the Eastern Corn Belt, and it's competing very well with cotton in the southern region as well, Louisiana. And so I'm anticipating a little bit stronger corn acres, but it is certain, I think when we look to what this report means to the market, this is the first step in a bid ask, right? So the planters or the producers are going to tell the market what they intend to plant. The market's going to react, and producers will have a chance to adjust to that. A colleague, Scott Irwin at the University of Illinois, has looked at this extensively in the past and kind of looked at what role does that price play moving forward. And he basically found that price isn't the dominant factor, it's weather. And so weather over the next couple of weeks is going to be the big determinant in terms of how much of this corn and soybean acreage gets planted. But I think I'm at the point right now where I expect, maybe 92 million acres of corn. All winter I projected a little bit higher than that, 92.5 million acres. So I'm still above that 91 million that USDA forecasted, and then the 90.8 million that the market's kind of anticipating right now. So.
Yeah, well, and it's kind of interesting too, because you talk about price not always being the dominant factor within these decisions. I think one of the factors that maybe isn't always talked about enough is trying to find certainty, because obviously a big portion of farmers are doing when trying to figure out what to plant, how to market grain and oil seeds is trying to limit uncertainty as much as possible. And really, to me, the soybean side, the soybean oil, that whole sector within the market seems to be the one that could fluctuate a lot more moving forward this year. So you might find more certainty within the corn market potentially.
So potentially, right? The reason I say
you always have to put a disclaimer on it, right?
Well, so I really, so soybeans is the one that is going to have to bid for the acres. And the reason I say that is because soybean markets are going to remain tight. The soybean stocks number continues to decrease as the world kind of has this appetite for oilseed products, whether that's for renewable diesel or for protein and other countries. Of course, Brazil's producing this massive crop to kind of help fill some of that demand. We see some increases maybe in oilseed production in Ukraine and that Black Sea region to counter their uncertainty with a higher grain or the higher variable cost of grains. And I just sit here and I say, I just, even at 88 million acres of soybeans in the United States, that's maybe a maintenance level to some extent. And I shouldn't say it that way, because I think that still decreases prices in the soybean market. But let's not sit here and think that that's just going to create this robust supply of soybeans and we're going to have $9 soybeans again. That's not the case, right? And so I do think even though prices decline for the soybeans, I don't think they decline as much as what the corn market would potentially see. Now, granted, that's with my disclaimer of I think U.S. corn producers will plant a pretty good crop and they'll get their window to plant corn. If it continues to rain, especially in the Eastern Corn Belt, maybe that favors soybean acres a little bit. Interesting though, if I can take a few minutes to just kind of make an interesting observation. The last year we had frequent and consistent rainfall was 2019, and I got asked the other day at a producer meeting what large amounts of prevent plant acres mean for corn and soybean actual planted. And I kind of smiled because in 2019, and granted, the policies have changed a little bit, and we can't count corn as a cover crop anymore. But in 2019, we still planted a lot of corn. And what we ended up doing is the prevent corn came out of the soybean acreage pie. And I just say that to say, if it starts raining and we get consistent rainfall, especially in the Eastern Corn Belt, and it takes acres out of production, it could very well be that soybean crop we're losing acreage from. And that just tightens that soybean picture even more.
So Ben, before you got to get out of here and get on with your vacation, what should farmers and ranchers really be paying attention to for the rest of the week outside of the reports we've talked about?
Oh, those are the big ones on Fridays or on Friday. We also get the quarterly hog and pigs report at 2 on Thursday. So our friends in the livestock weekly market outlook are gonna pay attention to that. And then elsewhere, just for us, next week on Monday is the first of the month of April, and so we get some of those crushing reports for fat and oil seeds and grain crushings that'll kind of give us a better indication, I think, at this point of the extraction rates maybe for those oilseed markets. Plus, we also get crop progress reports and planting progress returning next week as well. So I expect a very low percentage for planting progress, but certainly starting that up for the season.
So a very big week this week coming up. As Ben mentioned, if you'd like to learn more about our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. You can also learn more about us at that same location. Ben, it's always a pleasure. Have fun on your vacation. I'm Will Robinson on Brownfield.